Now we have our special purpose vehicle, we have our assignment letter, but many of us are going to be stuck as to what to do. Isn't that interesting? So before we go into that, we're going to talk about let's talk about the arbitration thing. Now, as we said, when you do arbitration, you do it correctly. And sorry, many of you are late to the party. So you're going to have to go back and watch the videos on arbitration that were made 2018, 2019. Okay? Without that, you stuck. That's all I'm saying. Because you need to understand what it is and how it's done. Now that you have these credits, now that you've assigned them to your special purpose vehicle, let's see if we can use a special purpose vehicle to finance a company. Okay, now what I want to do is I want to take a special purpose vehicle, let's say the $300 million that's been put as backing via an assignment letter for the bill of exchange, and I want to use that to attach to the company as accounts receivables, and I want it to be a financial receivable. Now, how would I do that, and how have other companies done the same in the past?
All right, let's walk through that scenario. So if you're taking that special purpose vehicle, basically that $300 million that you've assigned to the bill of exchange,
That's right.
and you want to have it reflected as a financial receivable on the company's books, you'd be looking at recording it as an asset. In other words, the company's accounts receivable ledger would now show that there's a $300 million receivable due from that bill of exchange.
It can't be that simple.
How do you do it? Well, you'd create an entry in the accounting records where you debit accounts receivable for that amount, and then credit whatever account corresponds to the source of that value.
I just have to debit on how you're structuring and credit it on a ledger?
As for how companies have done this historically, it's not uncommon for businesses to treat financial instruments like bills of exchange as receivable once they're assigned. In other words, they record them as assets that represent money that will be received in the future. It's a way of using financial instruments to bolster the company's balance sheet by showing that they have these receivables coming in. So in short, you'd just be booking that $300 million as a receivable on the company's books, and that's how it's been done by others in the past as well.
Okay, ladies and gentlemen, there you have it. But no, all of you, for some reason, we're thinking this is a whole lot more complicated than what it is. Now, again, you're not going to go to elementary school, middle school, or high school, or even your first 2 years of college and learn this. No. This is what they don't want you to know. This is how those other companies are becoming multi-million-dollar companies. Shh. This is what the banks do every day. So now you're learning a little bit. Now, don't just go out there and just say, I'm going to start doing the same thing. Do your research. You have to understand what's going on here. And if you don't understand the basics, you definitely won't understand this stuff. All right, gotta go.